Hey, what's up, everyone? How's it going? My name is Kayman, and I'm a Senior Solutions Engineer at the dYdX Foundation. Today, I'm going to be talking about API training with dYdX, and this series will be divided in a couple of different parts. The first part will be on an introduction. What is dYdX again? Why perpetuals matter? What is a dYdX v4 chain? And what is specific about that architecture setup? In the next series, we will then follow up how to set up your dYdX development environment. So this will be with Python. There's different clients possible, but we are going to choose Python because it's one of the most requested and most used programming languages. And then on the last session, we will dive into how you can use that to set up a WebSocket, how to place orders, how to cancel orders, and continue on that journey for automated API training with dYdX. So let's get started immediately. Okay, so what is dYdX again? So dYdX is a decentralized perpetual trading platform founded in 2017 by Antonio Giuliano. It's gone through different variations. So if you hear people talking about dYdX v4, that is because we are now onto the fourth iteration. So that's why you'll see me using dYdX v4 or dYdX chain or just dYdX in general. I'll use these terms intermittently. You can see that perpetuals are definitely something that is here to stay, very popular. And the reason is because there's a lot of liquidity. And that's why people also use it as a dominant venue for price discovery because a lot of people are trading this. And so the prices on perpetuals are definitely an indicator for people, and spot may follow from that. So what you have with perpetuals is a flexible contract where you can go long or short. You can also have leverage, and you can also decide to use that in your strategies. For example, to hedge, if you have a spot long and you hedge that, for example, with a perpetual short or something like that, in order to have like a delta neutral position, or you could also use that to speculate, or you could also use that for funding rates, arbitrage, and other use cases that people are trading nowadays. So what is exciting about the dYdX chain? I think it's one of the first perpetual exchanges that is fully decentralized, right? The order book is decentralized and in the mempools of each of the different validators. So that is a huge engineering effort that we have gone through in order to make that more decentralized. There's also a lot of MEV avoiding solutions that have been implemented, such as ABCI++ that was used in order to prevent MEV from happening to users. So there's a lot of things that are happening in this newest iteration of the dYdX protocol. I think it's important to say that everything is open source. So everything you can look that up on GitHub, and you can also inspect the front end, the dYdX protocol code itself, and even the toolings and ecosystem parts that were developed. They can also be spectated uh, on GitHub. So then moving on to the chain architecture part. So there's different ways to interact with the dYdX protocol. So you could use the web client, you could use the API, you could use the mobile version, but whatever you do, whenever you are going to place an order, what is going to happen is that will create a transaction, and that will be sent through a validator, right? Similar to how we know about how proof of stake networks works, there's a validator, and when that validator receives that transaction, it's going to record that and gossip that to the rest of the network. If the rest of the network receives that transaction and everyone goes through consensus and says like, okay, this is a good transaction, good to go, we place the order on chain. That will then be shared through the rest of the full nodes. This is an on-chain event, but it can also be off-chain events. And for off-chain events, I mean like very short frequency orders. Like, for example, market makers or professional traders, they will place off-chain orders, which are called short-term orders, because they want them to stay only in the mempool for a very short amount of time. Maybe they match, maybe they don't match. They stay in the order book, and when they matched, then they go on-chain. Before they're being matched, they stay actually off-chain in the order book of the local validator. But in any case, we're not going to dive too deep into that. I'm just going to give a brief high-level overview of this. But how the UI and how the mobile version then records all of these traits is actually by relying on a central piece, which is called the indexer. So the indexer is then going to record all of these on-chain and off-chain transactions and events, and it's going to aggregate that, create the statistics that are needed for the front end to know which order a certain user has placed, which fills have been happening, what is the order book, and all of the other aggregate statistics that are needed in order to know how someone has been performing, P&L, the latest orders, which ones were canceled, and whatnot. So that all goes into the indexer system so that the clients can read from that. And then on the other side, it goes also to different topics such as Postgres Kafka for historical access, for streaming, for listening to those topics in order to get more information. So everything happens from this indexer at the moment. So that is a brief introduction of how the V4 system architecture looks like. All right, on to the interesting part then, different ways to trade right now. One is via the UI. So I categorize that as the web version. So you can go to dYdX.trade and start trading there. Or you could use one of the API ways. So you just interact with it programmatically and do everything, for example, via TypeScript, Python, we have C++, and there's even a Rust beta version that has came out, and even a Hummingbot version. So Hummingbot is a third-party tool that offers a connector to dYdX, and you can use that UI then to set up your algorithmic trading strategy. I want to note also that there is a testnet, and throughout this series, we're going to use the testnet mostly because I don't want to fumble my bags. I don't want to risk my funds too much. And I think you also, as an API trader, you don't want to risk too many things first. So you want to trade and test on a testnet first. So you can go to the v4.testnet.dydx.exchange in order to test your strategies first. So there's a full UI version. There's also like a mint scan testnet, so you can check also everything via testnet first before you start trading. And then for those that want to trade on the go, there's also the mobile version for iOS and Android. Now let's take a look at what types of orders we have. Like I already gave a sneak peek that we have long-term orders, so that everything that you're clicking on the UI, usually that will fall into the stateful order. So these are long-term orders that can max stay valid for a 95 days. Don't quote me to that. Things may change over time, but usually you will be using stateful orders for that. On the other end, you have short-term orders. So these orders stay in the mempool and they are used mostly for high frequency trading, and they stay only valid for a maximum amount of 20 blocks. So that's specific if you want to do high frequency trading, short-term trading, and mostly API trading. You'll also not be subjected to the same rate limits that the long-term orders have. So that is an additional advantage of using short-term orders, and they stay off chain. So that allows for like higher volume, higher amount of trades. And then what is specific for dYdX is that there's both cross margin and isolated margin. So by default, your sub account will be on cross margin. So that means that you will have one cross margin equity account that whenever you are placing orders on different assets, that same margin will be shared and reused across all of those different assets. So that's cross margin. But we do added isolated margin trading as well recently. So that means you'll have a completely separate sub account where you can place trades with isolated margin. So only for this specific asset that you want to trade, you will have a separate margin. And then I want to notice that there's also other types of trades, so conditional orders, immediate or cancel, post only. I think these are the common types of orders and execution types that you will also see on other exchanges. So these are also available via dYdX. And then to the final part before we end off this first introduction session, in order to set up your API client, you basically follow 3 steps. So you set up a V4 client, and the client is used for you to interact with the chain or the protocol. And you could use, as I mentioned, Python, C++, Rust, whatever you prefer. And the only thing you will need is your dYdX private key. So you can get those from connecting to the dYdX front end. You'll have a option to export that. And whenever you export that, you can use that within the clients. This will change when permission keys comes out. But for now, this is a way how to do it. The second step is that you will have to set up a WebSocket in order to listen to changes or updates on your sub account. So as I mentioned, dYdX works with a sub account model, and that means that you will have a overall account, which is basically your wallet where your funds will arrive when you bridge and deposit them over. And from there on, we'll go into your default sub account, which is your cross margin account. And whenever you're doing any trades, when you are setting up a WebSocket, you subscribe to your sub account, it will receive all of the changes that are happening. Every order that you're placing, fills, cancels, maybe even liquidations. I hope not, but anything that is happening that will be then listened by your WebSocket, so you can get real-time updates and you can inform your strategy to make changes based on those real-time updates. And then finally, that brings us to the final component, which is where you develop your strategy. So you have to set up your buy and sell trading signals for your algorithmic trading algo in order to trigger then the V4 client, that code that you have written. So you decide which strategy you'll follow. There's a lot of things. I'm not going to go too much into detail there because everyone's strategy is different, but you set up that strategy, you define when to place and cancel orders, and I just give you the framework on how to do so. So that is the last missing piece that you need in order to have the full workflow of trading with an API client and setting up your own API trading bot. There's one more thing that I want to notice that is specific on dYdX chain and decentralized exchanges is that you can actually set up also your own private RPC node in order to have better performance, in order to have more flexibility on how you set up that node instead of relying on a public endpoint. And then you'll also not have any rate limits or anything that you don't prefer. All right, so that was it. I hope that that was very informational, that was actually useful for you. So if you want to find out more, definitely check out the next series on how to set up your development environment and how to actually start placing and canceling orders. For now, you can also go into our Discord where we have an active community in the developers channel. You can scan that QR code, or you can also start using the clients right away if you don't want to hear anything more from me. So you can just go to this GitHub link. All right, that was all from me. Thank you so much for listening.